So guys, I just want to go over some of the trades that I took post CPI today on the 13th of November, Wednesday. So CPI came out at half 1 UK time. Nothing out of the ordinary or nothing, too different from what was forecasted. So yes, news came out. I've been bearish going into the day. As you can see, right, weekly time frame candle, we are bearish. We've been in significant bearish. We've had significant bearish weeks every single week for almost 2 months, and going into this week I was bearish. I was watching this order block, but after seeing yesterday's candle, I'm now anticipating price to come down to the sell side liquidity at 1.26648 or even 1.26125, but obviously I'm watching that level first. And yeah, let's see, just review some of the trades that I took on the 4-hour time frame. Right, we displaced low from the start of this week, from Monday onwards, and we put in this really strong bearish candle. Honestly, after that, price tried to pull back. On the 4-hour time frame, it's not as clear. We had this bearish fair value gap. It didn't even come into the 50% of that, but on the 1-hour time frame, it's clearer. I was hoping that price would come into the 50% of this fair value gap and find resistance of this range, but it didn't. And during CPI, right, we cleared this first fair value gap and it came into this second fair value gap and held, which that's fine, that's a point of interest, a good point of interest. However, the more significant part here is that we had a swing high that was, liquidity grabbed above that high, another swing high, liquidity grab above that high, and then during CPI, we had this high wick pin bar candle or doji candle, and that to me was a good suggestion that price is going to continue lower. And I didn't even wait for that to happen when I traded. So this is a CPI candle. We took out liquidity above all of this high. Bearish week, waiting for liquidity to be taken out above some swing highs where all the stops are resting. Taken that out, and then since then we've continued lower. I've taken target at, I believe, 1.270 for one of my accounts, but for some of them I've taken it before and some of them I'm letting it run. So the first trade that I took was somewhere around here after this candle had printed and this candle was forming. I believe I took an entry somewhere between here, just after the 5-minute candle close, or the second, so not at half 1 but 1:35 candle close, I was entering. One other trade I entered was at 57, somewhere around here. Where is it? Somewhere around here, I believe. Yeah, my stops have been at this high the whole time, and yeah, I was really aggressive. I entered with almost 2% risk on some of the accounts, and as price came down to this fair value gap, I exited that trade, and that's fine. That's one trade. Essentially it was a one hour that I gained on some of the accounts, and then after that we pulled back. We came into this rejection block, right? I was waiting. This is a candlestick pattern that I like, a bearish engulfing candle, which is followed by a CPI candle, makes a high, price tries to push up with this pin bar, fails, and then bearish engulfing candle. Then price came back up, rejected that rejection block with this bullish engulfing candle, and then this pin bar that tried to push up. To me, that is a suggestion that it's most likely going to fail to continue higher up, and then that was followed with this bearish engulfing candle, and that was even stronger evidence that it's going to continue lower. I traded after that pin bar close right there, but with spreads and whatnot, I think I entered around 50 and had my stops above these highs. For one of the accounts, I exited the trade at, let me just see. Yeah, so for one of the accounts, I exited the trade at 1.270, that psychological level, and that was almost 2R because I risked slightly more than 1%. And for my other accounts, it's actually running at the moment. I want to hold that for until I see this candle close, the next hourly candle close, and the hourly candle after that close, and then I'll decide. Honestly, I want to aim for this sell side liquidity is my what I'm aiming for. We have also obviously need to consider this rejection block that price has currently tapped into, right? It's going to find some support there, and what's he going to do? I do believe it's going to continue lower. Maybe I'll start taking targets. Probably a good sign to take targets because I'm already 2.3R in most of those trades. So yeah, at the moment, right, I'm not really. I'll leave a I'll take some targets. That's a reset, right? A retest right there, and I would like to take some targets off there. But at the moment, running at 2.5R. So yeah, let's see how this plays out. We got PPI tomorrow, right? If we don't take out that sell side liquidity today, I do anticipate price to pull back into this range. Right, if we just start consolidating from now until, let's say, PPI tomorrow, PPI, I expect price to pull back in and then drop But by the looks of things, we might actually just drop to that sell side liquidity, find support, and then during PPI come down and take out a swing, where I will look for an entry to go long. So let's see how this plays out. Honestly, this is such a good catch. And it's a really good trade. Like I said, on the 5 minute, what did I say? A bullish candle followed by a pin bar, and then that is followed with a bearish engulfing candle. This is just such a sign that price is gonna fail to push higher up. Honestly, entering at this candle would have been a really good entry too, with stops above these highs, and again targets at that 1.27 level was something I was watching like the whole time, or even the 50% off this rejection block. But yeah, I think I'm gonna start moving my stops into break even. It's already moved to break even, and yeah, I'm just watching this play out now. This is how the next day and the next few days ended up on this pair. This is definitely one of the best trades I've taken, and it was almost 4 hour with the two different trades that I took, because I let one of the trade actually run down to that sell side liquidity, which it hit the next day, next morning during New York session, New York session, and found support during New York session, I believe, and put in a market structure shift, and then continued lower to trap buyers, and then continued lower into the next sell side liquidity that I was watching, which is down there, which price came down to on the Friday, I believe. Yeah, so the Friday, and then found some support from Monday onwards, but then it continued lower. But regardless, it was a really good trade. I waited and I was patient until CPI came out. We had multiple fair value gaps on the 60-minute that displaced lower, and then we started to make really different, swings. I started to take out those swings, and to me, on the 15-minute, seeing that bearish pin bar was a really good sign that we might come. This is this candle that price could either trade inside of or come up and take out the liquidity off and then drop lower. In this case, yeah, it stayed inside that range, especially on the 5-minute, when it starts to fail to make a new high and put in these bearish engulfing candles after putting its bullish pin bar candles, and then to me that's just another indication that we're going to continue lower, come down. Next day we go past the initial sell side liquidity and we come into the next sell side liquidity, but that happens on during the next week on Monday. So yeah, that's just a trade analysis, and this is how the market played out. We eventually came back up into this range and found resistance last week, mid-December, around early December, and right now it looks like we're going to continue lower, but we'll see how that plays out towards the end of the year.